Welcome back. In this video, we're going to go through the definitions of the floor trader pivots. And just to make the chart a little bit easier to see, I have turned off the visual intelligence indicator, so we get just a little cleaner chart, so we can look at these horizontal lines, which comprise the floor trader pivots. I have the chart roll back to the end of a day, so you can kind of see how some of this works. At the end of the day, actually at the very first bar, after the close of the day, the new levels are calculated from the previous day's activity. And the software is capturing yesterday's close, yesterday's high, and yesterday's low. So as you can see in this candle right here, this was the last candle of the day, and where it closes at is now denoted as this solid yellow line. The solid yellow line is always going to be yesterday's close, and I choose yellow for yesterday's close, yesterday's high, and yesterday's low, just because yesterday starts with a Y and so does yellow. So this one is yesterday's close. Now if we expand the chart, well, let's see, the better way to do that if we just turn off turn on the scale to indicators. So if we go to Format Instruments and we go to Scaling and we select Expand Scale to Indicators, then we're going to see everything. And I won't keep it on here for very long because it's difficult to see. But as you can see, this was yesterday's high, right, and this was yesterday's low. Now we can scale back to see where it created those. So yesterday's low was created right here, and as you can see, we can tell that as well because that's where the all sessions low is as well, right? That's this dashed white line as well. That's the all sessions low. And if we scroll back further, then we'll be able to find where the high was created, and it looks like this was where the high was created right there. I just conveniently lined it up with that arrow, even though that arrow doesn't really mean anything right here. So that's where that's where yesterday's high was created, and then it just calculates that. Well, it just keeps that number in its memory bank. So when it comes over here, for the new day start, that's where it will print yesterday's high. So there it is there as it scales. Now these other numbers are all calculated based on a combination of yesterday's high, low, and close. And the first of those is the pivot point. So the pivot point is right here. It's always going to be the solid white line, and it's simply the average of yesterday's high, low, and close. So if you kind of visually look at that, you can see it looks like it's the average of these three numbers. And then the other numbers are different combinations of those particular numbers. And as we go up, we'll find R1, we'll find R2, R3, and the alternate R3. There's a different calculation for it. And likewise, going on the support side, there's S1, S2, S3, and the alternate S3. And there are midpoints for each. These dots that are in the middle, each one has a midpoint, which is exactly what it sounds like. It's the midpoint between that and the next one, right? The R1 to R2, exactly in the middle is going to be mid R2. Between R2 and R3 is going to be mid R3, and it's going to be exactly at the midpoint. So that's what those are. Now to get into how we use these, we'll get into them as we get into the trading methodology. But in general, let me kind of show you what's going on. I'm trying to get rid of all of them. Okay, let me go back to the format instrument and turn off the expand scale to indicators. so we can see a little bit of the action here. So let's go backwards and see kind of how uh, we we look for these things to help us trade. As price is coming down towards one of these levels, it doesn't matter if it's called support or resistance. If price is coming down to it, as it is here, see, we expect to see some level of support here. Now, it doesn't mean it's not going to go through it. Many times it will pause, right, and continue to go through. And we have entry setups for those conditions as well. But as you can see, this was a perfect support off of yesterday's close, and then it went back up. As it's going back up, we expect mid R1 to have some resistance. And as you can see, it kind of does. It kind of goes flat here, right? You know, it does penetrate it. And we don't mind it penetrating it because we look for a setup, and we'll get into that later, on the entry side later on. And as you can see, it pulls back. So this was resistance. As it pulls back towards mid R1, mid R1 is now support because it's heading towards it. And as you can see, it offers perfect support and goes back up towards yesterday's high. Now, as you can see, it paused a little bit, right? It went above it. We'll get into what we call this a little bit later. And then as it comes back, now what is yesterday's high? Yesterday's high is now support, right? Which is what it offers, and then it goes back up. And in various and sundry degrees. Now, these are acting fairly well. I mean, sometimes they act perfectly, and then sometimes they don't. And that's okay. We are only trying to get the best of the possible setups that we can. So that's okay. And so as we go forward, then we can talk about the different kinds of setups that we have. And etc. So let me see if I can get rid of these things. I'm playing with a new tool here, if you can't tell. It's called Epic Pen. One of the clients suggested it to me because it was exactly what I was looking for. So I can mark on the charts. And so let me find a downtrend. And so we can kind of see the action on a downtrend. And in the last couple of days, as I kind of said in the other video, have been kind of up days. So I had to scroll back a couple of days to do this. And so here we have yesterday's close and the pivot point, right? Because those are solid lines. And as you can see in the early morning, right? This is the U.S. market 6:33 time. We come up to yesterday's close, right? So it's acting as resistance here. Oh, that's not what I wanted to do. Huh. Okay, let me see if I can do this a different way. Oh, it was just selected to be way too big. Okay, so we come up to yesterday's close. It acts as some resistance, pulls back and goes over it, and then comes back down underneath it, right? Comes back down underneath it. So we didn't get any good setups here to go on the long side, but it kind of comes back underneath it, meaning that the market wasn't that excited for it to go up in this direction. It just didn't have the energy to do that. So then it comes back, right, and then it gives us these nice hits right up against the pivot point. Because what did we say? As price is coming back up to this, then these two, yesterday's close, is forming resistance, right? So that's resistance, and then it hits that, and then it comes back down, right? Comes back down, and so so the midpoints, as you can see, it slows down here. Right, so it's offering some form of support, but then it ultimately fails, right, and it goes down. But it does give us an opportunity here. Now we can kind of all put this together when we have everything on the chart. But you can see this is what we're looking at. As it pulls back up, right, towards it, then this point is now resistance. and the market comes down. Okay, now we penetrate. So we're going to get some action here because S1 and yesterday's low is pretty close together. So as you can see, it came down quickly here, but now it's going to kind of go sideways. We don't know if it's going to bounce or not. We absolutely have no idea. We have to watch and wait and see what it's going to do before we come to any decision. But since it came down here, we're actually looking more, penetrated it fairly well. We're actually looking for it to roll over more than anything else. Now, this is not a perfect setup. We'll talk about perfect setups when we get into trading. But as you can see, it came back up. It formed some resistance here. You can see a triple top there, formed some resistance there, and then the market came back down, right? So these are just some ideas of how we use the floor trader pivots as support and resistance. So the actual equations for the floor trader pivots are public information. The reason they work is because they have been around for decades and decades. They were being used by floor traders before the actual computers were starting to be used. When the only way you could make a trade is to call your broker on a phone and place an order. So obviously with technology, the world has progressed significantly since then, but these floor trader pivots, as you can witness with your eyes, are still in use. So they used to have to calculate these by hand the night before, trading would start, and they would literally carry them around on the floor with them. But now in the modern age of computers and little software magic, then we can get these things popping up on our screen, and we can observe how it's trading around these. So that's the key aspect, is to observe how they're trading around these important levels. Okay, so we'll start putting all this together in future videos.